Hey, I just wanted to pop out a video talking about how can the markets continue to rally despite these really bad economic news and the headlines and the protests that are going on in the country. So that's what we're going to do in this video. So it is astonishing to see how markets can continue to seemingly ignore what's going on with the protests, with the damage that's being done in some of the major American cities, and of course with the civil strife that's going on. Here's what's happening. People forget how much stimulus is coming and has been authorized in the US system for the recovery. And that's what I really want to get at. Now, it's hard to believe because it's seemingly we're getting these just horrific numbers out on the economy. I think most people are expecting the second quarter GDP to be down somewhere between 10 to 12% for the quarter, or 40% annualized. That is extraordinarily bad. But here's the thing. It really doesn't matter because we know that this quarter is going to be horrible in a big way. What we also know, and what the markets really are focusing on, is the massive amount of stimulus that's in the system or coming in the system. If you think about it, between the different two CARES Acts and the administrative action, and of course what the Federal Reserve can do, I mean, those three things alone are worth about $4 trillion, $4.3 trillion. If you add into the authorized amounts, we're talking about numbers that are around $9.4 trillion. That is literally about half a GDP or more at this point that's been authorized to come into the system. And that's why we're seeing such an incredible rally in stocks besides or in spite of the really bad economic data. Now, as far as that data goes, yes, it's going to be really bad. And this Friday, we're going to see some really bad numbers when it comes to the unemployment rate. It could be as high as 20%. It could be somewhere really between 17 to 20%. But from here going forward, I think where we're going to see the market focus and where the economy and everybody else is going to focus is on beating these numbers, beating the horrific projections on how bad things are going to be. So keep that in mind when we're looking at the stock market. It's not about now, it's about the future and what's coming with the future. So that's really important. I also want to say too, along with the amount of stimulus, is the reopening, right? The reopening is occurring. Even here in Illinois, we're in our phase 3 program. Mayor Lightfoot, Chicago Mayor Lightfoot has said that we're going to enter in the phase 3, and you can look that up. It's a little bit complicated, but the whole country is moving towards this. Now, there's some states that are open up completely already, totally get it. But the economic momentum is building. So we're going to move out of how bad things are for this quarter into a fairly sharp positive reaction heading into the third quarter. And that's something I want everybody to keep in mind. Yes, we've seen some CBO projections that it will take 10 years to get us back to the level of where we were in the fourth quarter of 2019. But I don't think it's going to take that long. I don't think it's going to take 10 years. I think it'll be 2 to 3 years, especially with the amount of stimulus that's been put and is coming into our system to assist with the recovery. So whether it's a V recession, it may not last on the V on the other side of it. Maybe it's more like a swoosh, but I think that swoosh is going to be pretty steep. And again, that's why markets are so ebullient, they're so excited, and they're rocking forward. Now, what industries are going to recover the fastest? Well, real estate is going to be one of them for sure because of very, very low interest rates and, of course, because of the stimulation coming to the economy, and workers have been able to go back faster into that industry than other industries. On the flip side of that, the industry that's going to remain soft for some time, as you probably all know, is the leisure and hospitality and travel. Obviously, these were dramatically hit, but I also feel like they've been sold off way too much. Here's what I'm thinking going forward for a lot of the economy. It's going to be a bifurcated situation where you're going to have younger people, like the people that were down in the Ozarks or the people that were partying up down in Florida. Those people are going to say to themselves, you know what? There's a risk to being around other people, but it's not as big as I think it is, and I'm willing to take that risk to go back to work, to commingle with other people. And that's a cohort that's probably between 20 and 40. Above that is a very different group of people, and maybe between 50 to 70 are going to say, you know what, I'm kind of risk averse. I think I'm going to step back here. I would prefer to, have a shield between me and other workers and so on. And the best example that I can show you of people adapting right away to this bifurcated nature of human beings in our country is going to be what's happening in the universities. Already, as an example, Notre Dame has sent out that they're going to restart school on August 10th, but it's going to be from August 10th to the beginning of right before Thanksgiving. So they want their students to come back and obviously use social distancing, but for the professors, we'll see if they have to be behind, screens or plastic screens or appear on a screen. I'm not quite sure, but they're going to figure it out. It's life or death for these universities, and I think it'll be emblematic for how the rest of the country really adapts to what's going on. Okay, that's a lot to digest, but that's really, just to recap this, good things are happening. There's a tremendous amount of money that's coming, and the reopening is occurring. So those are good things, and that's why the stock market is rallying. Okay, if you want to learn more about this, you can take a look at the video down below. This is the Overcome, Adapt, and Thrive videos that we're putting together. If you want to subscribe to these videos and get them as soon as they come out, just click the button below, and I'll see you in the next one.